When I started trading many years back, this is how my chart used to look like. With so many indicators like MACD, Bollinger Bands, Ishimoku, ADX, RSI, and all these. So I used to think that having more indicator mean I'll have more information. It will give me better understanding of the market movement. But I was wrong because when you have too many indicators on your chart, it will makes you confused because every indicator can give you different signals, and that is what they say that too much analysis can make paralysis. After that, I stopped using indicator and I started plotting support and resistance on my chart. And after started putting support and resistance on my chart, this is how my chart looked like. With too many lines on my chart, like horizontal line, trend lines, everything, and it would only make me confused. Like when you see this kind of chart, you will get confused whether you have to take a short trade here, whether you have to take a long trade, because everywhere you will see the lines, right? Horizontal line, trend lines, and that is what makes you confused whether to take the long trade near the support or whether to take long trade near the resistance. So after that, support resistance started working only after I gained the knowledge on how to mark properly support and resistance on my chart, when you have to give more importance to support and when you have to give more importance to resistance. After learning all this only, support and resistance started working. And that is what I'm going to discuss in this video about how to draw proper support and resistance levels on your chart. If your chart also looking like this with too many lines, too many clutters on your chart with the indicators, support and resistance, then how you can have a chart from this to this kind of very clear chart where you can analyze the chart properly, marking the only important support and resistance lines. And that is what I'm going to discuss. Three important points, that is when support is powerful on your chart and when resistance powerful on your chart, because support and resistance are not equal. If you think that support and resistance are just support and resistance on every chart, no. Sometimes you have to give more importance to support, sometimes you have to give more importance to resistance. What I mean by powerful, that means whenever price comes and holds that support, that means powerful. Whenever price breaks that support, that means it's not powerful. Same applies for resistance also. That is what I mean to say. When powerful mean when support is going to hold, and when resistance powerful mean when resistance going to hold. And second thing I'm going to discuss, how properly mark the support and resistance level on your chart. And third, I'm going to discuss two powerful strategies to trade with support and resistance. So that is what going to be discussed in today's video. Before that, one small announcement. I'm launching a new webinar series called Learn to Read Price Action Charts Like a Pro. So this webinar series will be conducted every day from morning 8 to 9. That is Monday to Friday. In that webinar, I'm going to discuss end of the day chart analysis plus pre-market analysis. You know that earlier I was conducting end of the day chart analysis on weekly basis in YouTube membership. Same will be conducted here in the daily format. That means every day from 8 to 9. And it could be useful for both new and experienced trader, because new traders, if they don't know how to read the charts, that I'll be discussing every day in Nifty, Bank Nifty. And people who are experienced, who have taken my webinar earlier, who are my students, it will be refresh kind of thing for them, where they can understand about the price action on the Nifty and Bank Nifty chart. Okay, now look at this chart. This is 29th November chart in Nifty. First, let us mark the support and resistance level on the chart, right? First resistance is this, and same time support is this. Next is resistance is around this level. This is the next resistance level. And where is the support? Support we can mark at this level, right? So look at this chart. You have both the support and resistance. There are red lines which are resistance. There are black lines which are support. Now take few seconds, maybe 5 seconds, and tell me which you will give more importance to. Will you give importance to support here, or you will give importance to resistance, or you will give importance to both support and resistance? So let me count 1 to 5. Within that, you have to think whether you will give more importance to support or resistance. 1, 2, 3, 4, 5. And the correct answer is, in this chart, you have to give more importance to only support, not the resistance. Now ask me why I'm saying you should give only importance to support. You have to give importance to support in this price action because first you have to see what is the market structure. Okay, what is the market structure? Market structure is in the uptrend. So when market is in the strong uptrend, then you should ignore all the resistance, then only you should focus on the support level. That means why I say that only you should focus on the support level, because it is obvious when price in the strong uptrend, then what it makes? It makes higher highs, higher highs, higher highs, right? So if it has to make higher high, if trend is strong, then obviously its resistance has to be get broken, right? When the structure is uptrend, then you have to give more importance to support, which is likely to hold, and you should focus less on resistance, because resistance likely to break if trend is strong. Okay, now look at the another chart. Here also, let's again mark the important support and resistance. So here on the chart, which you will give more importance, just like how earlier we said, first you have to see what is the market structure. Market structure on the down, right? And whenever trend is down, you should ignore the support and you should give more importance to resistance. So here you can ignore all the supports, because support eventually likely to get broken. More importance you have to give to resistance lines. So that is what the first point I discussed, that support and resistance are not equal. Before understanding whether you have to give more importance to support or resistance, first look at the market structure, whether it's an uptrend or downtrend. Then you have to decide whether you have to plot only support or whether you have to plot only resistance on the chart. Okay, so now let us discuss how to mark properly support and resistance on the chart. Look at this 26th October chart. What is this? This is the proper downtrend, right? In the downtrend, we should only focus on the resistance. And to mark the support and resistance properly, you should have always at least two important swing points, then only it is known as resistance. So two important swing points mean in the downtrend, one you can see that very big swing point, right? So what you can do is mark that level on the swing points, and when price comes back to that swing points, and if it makes a bearish candle, that is the place for marking the resistance. So that means even next time when price comes here, as you can see this candle, that is the place you can go for short, or even here also going short, because already it is meeting a previous swing points, and preferably swing point should be the recent. And another point is whenever you want to mark the support and resistance, instead of just marking the horizontal line, it is better to mark the box rather than just a line. For example, this candle made a strong wicks on the downside showing support. This candle also started coming near that candle low and made a wick. So that is the strong support, right? So in that case, what I suggest is instead of just marking the horizontal line, better to go and mark the box between the two swing lows. One swing low is this, another swing low is this candle, right? So what I suggest is from this candle low to this extreme candle low, you can mark the box like this. That can give you better entry. So instead of just marking single line, I suggest marking this kind of a box between this candle low and this candle low, which is also called a termination zone. Okay, so that is what another point. When you want to mark the support and resistance, better to mark a box rather than a just single line, because that is called termination zone in support and resistance. Okay, now next we'll discuss about the two strategies to trade support and resistance levels. And the first strategy which I'm going to discuss about a method called swap zones. What is the swap zones? Swap zones mean whenever the wicks of the previous swing and the wicks of the current swings meet, and that place is called a swap zone. For example, look at this chart. This is the 14th September chart. Where is the extreme wicks? You can see that extreme wicks on the first candle is 915, right? It has made an extreme wicks, and you can see the price action clearly that it is making a downtrend, right? Market structure is down. So what we are looking for? We are looking for a shorting opportunity near the resistance. So this swing, I will mark a horizontal line, and I marked a horizontal line on this swing, and this candle had swapped that previous swing, right? That is called, I said, swap zone. And once it start making a bearish price action, that is the one of the way to trade the support and resistance. And if I had to give you another example, Look at this 9th June chart. It's also in the strong downtrend, right? Where is the swap zone? You can see that first candle low made a big wicks here, right? So what we'll do, we will mark a horizontal line and wait patiently for price to come back to that wicks, which is a swap zone here. This is the candle is a shorting opportunity because that is where it made a bearish candle, right? So that is the new term you learned from this video, that is called swap zone, but applicable only in the support and resistance. Swap zones also applicable in the uptrend also, just like I've shown you in the down. And now the second strategy which I'm going to discuss based on Fibonacci level. Fibonacci retracement is a method which is very powerful when one wants to trade near the support and resistance level. So now let us discuss briefly about the Fibonacci levels. You can see that on my chart here I have a Fibonacci retracement already there, right? When you click the Fibonacci retracement, it will give the important levels where price likely to take support. And to mark the Fibonacci retracement, you have to mark from one swing to another swing. One swing, you can see that first candle low is the swing, and next swing is this candle high is the swing, right? After that, price started coming. So Fibonacci retracement is something where there are many levels are there. Like you can see that 0 to 0.382, 0.5, 0.618, and 0.786. But the most important levels are 0.382, 0.5, and 0.618. When in the strong uptrend, price likely to take some. And there are two types. That is the deep retracement and shallow retracement. When price comes to 0.5 or 0.618, that is called deep retracement. And when price bounces from 380.382, that is called shallow retracement. When the trend is very strong, then most of the time it is likely to take support near the 0.382, and when it is going little bit deep, then it can go up to 0.5 to 0.618. So that is why I mark only these three lines as a purple color. That means only you should give more importance to this blue box, purple box on the chart. So now when price made a big swing high, then where price likely to take support based on Fibonacci levels, price is likely to take support near this purple box. And when you see pin bars or a bullish candle, chances of trend continuation on the upside. So that is what the second strategy, trading support resistance based on Fibonacci retracement. And this Fibonacci retracement applicable in the downtrend also. For example, this chart 21st September, right? Where is the swing? One swing to another swing. One swing is this candle high. Next swing is this, right? So we will track this to see where is the price likely to take resistance and reverse. So you can see that on this chart, after that, price started taking resistance near the 0.5 and 0.38 and made a bearish candle and started going down. You can look for the pin bars or engulfing candle, and then only it is a kind of confirmation that price likely to reverse from there. So if you are new to Fibonacci retracement and if you want to make one exclusive video on Fibonacci retracement, then go below comment section and let me know so that I can plan one exclusive video on Fibonacci retracement. And finally, if you want to take very high probability trades to trade support and resistance, then I suggest swap zones along with Fibonacci levels. That is one of the high probability. For example, look at this chart. In this Nifty chart, where is the swing high? We'll mark the swing high about this candle high. Trend is on the downside. That means we'll focus only on the resistance. So we'll mark this swing high to this swing low, right? So we marked it and now we will extend this, right? We have extended this. You can see that one is the Fibonacci levels and also we are marking a swap zones, right? So where is the swap zone? Swap zone is this black line. That is where this candle exactly took the resistance. And same time, it's a Fibonacci retracement 0.50, right? Within that blue box. And after that, started going. So sometimes what can happen that here you can see that instead of reversing from the Fibonacci level, it made a big bullish candle, right? Now you can't short based on the Fibonacci levels because there is no price action confirmation. One price action confirmation came here with a bearish candle. Now shorting maybe high probability trades, not shorting anywhere here because it is trading above the Fibonacci zone and this candle closed below this 0.50 That could be one opportunity, or another opportunity is here. So that's about today's video on when support and resistance are most important, when support is powerful, when resistance is powerful, and how to draw properly support and resistance levels. And I discussed two strategies to trade support and resistance levels. So let me know in the comment section, how did you find this video? And if you want to learn more about the price action, if you want to learn more about day trading strategies, swing trading strategies, and then you can go below this video and where you can check my all courses like day trading, swing trading, option trading courses. And if you are interested, you can enroll for it. And as I said earlier, I'm starting this new webinar series, that is Learn to Read Price Action Charts Like a Pro, where I'll discuss both pre-market and end of the day chart analysis. If you are serious about learning price action, then you can part of this initiative, and the details I have given below this video in the description section. So that's it guys about today's video. I'll see you soon with a new video. Until then, bye and take care.